Good morning, everyone. Microphone check, screen check. I see my my YouTube video thing went off on right on time. That popped up too, so I know that video launched. I have a just a quick side note. Just launched a video on YouTube right as we're opening the morning session here about a drawing tool bug that I was having with Ninja. It's just a quick little 2-minute video. But if you've been having some issues with your drawing tools after doing the contract rollover, that video will explain how to fix those problems. I spent the better part of the morning dealing with all that garbage, so I wanted to get that video out ASAP so you guys had that this morning. So take a look at that if you've been having some issues with the drawing tools. That should help you out there. Anyway, on the left side of the screen, before we jump on in, make sure to read through the live trade room morning prep PDF. Very important to go through and understand everything that is inside there. Just a quick note before we jump on in, please keep in mind that the YouTube broadcast does have between a 5 and 30-second delay, depending on where you're logging in from, which will definitely impact the timeliness of what I may be talking about at any given moment. Just want to take a second to give a shout out to our latest members that joined overnight, last night, this morning, yesterday, etc. Thank you so much for the support. I'm pumped to have you on the SSFTG family. If you aren't a member yet, you have a few different options available to you to check out if you are looking to further your trading education and career, or you're just looking for a cool place to hang out with other like-minded people. Here on YouTube, you can check out the join button below the stream. The YouTube family gains access to the extended hours trade room, which continues the morning from 10 until whenever the market closes, 10:30, 11, whenever things start slowing down. Every member, of course, also gains permanent access to the Discord chat server, and of course, you get the awesome badge next to your name to show your support here on YouTube. To understand our day trading approach and what we're doing here every day in the room, look no further than the Day Trading Academy. That's over on SSFTG. Whoops, I accidentally snoozed that while I was messing with my levels. Anyway, you can find that over on SSFTG. Listen, it's not a lightweight PDF or something you're going to finish in an afternoon. This is something that you best tuck in for because you're looking at about 19 plus hours of course material, study material, homework, review, all kinds of stuff. Big stuff to go through. Lots of videos and all kinds of things to get you going in the right direction. And then finally, the big one, VIPs. VIPs have exclusive permanent access to everything we just talked about, but along with that, they also have permanent access to the non-delayed stream covering the entire morning session from 9 until whenever we close, and that way you can ensure the fastest connection possible and that you don't miss any beats along the way. Alongside that, VIPs also have access to our monthly webinars, which there's one coming up right around the corner, actually. Private events, one-on-one scheduling access, all kinds of cool stuff. So whether you're here for the very first time or you're a seasoned VIP veteran over on the Zoom stream, welcome. I'm glad to have you trading alongside with me today and analyzing these crazy markets of ours. Let's take a look at some news, take a look at some charts, see what's going on for today so we can best prepare ourselves for the day, or well, the lack thereof. I guess we'll have to wait and see. Don't forget to grab your morning DP levels. Those are posted for you this morning to cover all of the major 7 markets that we take a look at. So we've got those covered for you there. And as far as the news calendar goes, we actually have a few things. Hey, it's kind of nice, right? As far as the news calendar goes, earlier this morning, 8:30 core retail sales came out worse than expected. We also had the PPI, which came out better than expected, and the retail sales for May, worse than expected. So the news was kind of mixed earlier this morning, but generally more on the negative side than the positive side. As we go into the U.S. session, there are no more large news announcements. It's only medium and small. The next news batch is at 9:15 with the industrial production year-over-year, month-over-month, all of that for May, as well as the capacity utilization rates, all that fun stuff. At 10 o'clock, we've got some medium announcements with the business inventories for April, NAHB housing and market indexes for June, retail inventories, all kinds of stuff. But again, it's all very small to medium, not really a whole lot going on there. It is Tuesday, and that means that it is API Weekly Crude Oil Stock Day at 16:30 this afternoon. That will give us a heads up as to what to expect going into tomorrow's inventories. The API for today, -3 is the forecast, -3 million. We'll see what that comes out as. Now, just kind of getting a preview for tomorrow's crude oil inventories, they're forecasting I must be blind. Where the heck is it? Wow, a -3. Okay. Really? That's spot on. Maybe they're just going with the API now. All right, well, either way, that'll give us that one. So we've got all that taken care of, and that's all ready to rock and roll. The news calendar is not a ton to really worry about for today. Let's dive in and take a look at some charts. Over on the NASDAQ side of things, we've got the bull trend, and the bull trend hasn't stopped going to the upside. I mean, it just keeps ripping. But the big thing that we really are, and we were kind of talking about this yesterday as well, with all of these spiking channels, which one's it actually going to calm down and kind of figure out that it wants to stick to? You know, there's a lot of different levels inside here that can kind of mess things up a bit. So looking in the nearer term, I think it makes a bit more sense that we probably stick with the closer anchor over here. This is the only one that really allows price action to kind of continue to fit with what's going on. So we've got a rising potential channel, but I don't really want to call it a channel because we do have the wedge at the top that is potentially also coming off of. Very sideways, not really a whole lot of action going on from that perspective, but maybe this breakdown wants to get something going. We'll see. I think it's more likely bullish than anything else, but if we're looking at this from this nearer perspective, a deeper pullback, the negative half DP would be just underneath the 14,050s. Seems like just yesterday we were at 14,000. It's crazy how much it can move, huh? Looking from that pinnacle low that we had down at the base here, the first pullback that they had was an L3, which is technically that's good enough, right? That works. With a continuation to the upside, we had an L1 pullback, another L1 pullback, looking for the L1 pullback. So the L1 pullback down back into like the 14,080s or so if they want to hold it. And that does line up okay with the bottom of the wedge, negative half DP. There are a few things that are kind of trying to stack up. It just needs to pull back a bit further. Over on the S&P, the S&P has a very similar situation in that we've got a nice continuation to the upside. Bulls are driving the market higher. Everything is looking pretty good. The channel still doesn't fit here. That doesn't really make sense on this end either. More likely going to be a wedge top. But, well, they just tried breaking above the wedge top. Didn't work, and now we're underneath it. That doesn't necessarily mean that the market can't go screaming higher here, right? This is a very strong reversal off of those lows. But holding the inside of the top of this wedge is a definitive problem. And if it starts cycling lower and the support doesn't show up here in the 42.25s, they left behind a wide open door all the way down until the low 42.25s, and then we're back to where we started yesterday. This is on a slippery slope. I mean, the bulls really need this thing to crack higher and get back above these positive half DPs, start getting that ascent to the upside going. And if they can't, they're going to run into some trouble here. On gold, I mean, gold did have that nice bottom, but it didn't go far enough. We wanted that little bit lower, and it didn't quite make it. Honestly, the fact that this has such a very nice rotation off of the bottom, and the bulls had a really strong attempt. They failed, potentially failed again. If this starts rolling back over, what better excuse for the buyers to reload down there and actually physically test the point that it missed yesterday down there and get all of those jobs done just to see it V-bottom off of that low? That's what I'm looking for. I would love to see this come back down to that area and give a nice little push retest. Maybe even some form of a... it doesn't really fit an avalanche wedge. That'd have to be like over here. So it's still got some room, but that 3-press wedge low, everything lines up almost perfectly right down here. It's a little bit further. Crude oil rejecting off the highs, testing just ahead of 72 and pulling back a little bit now at 71.73. Here again, I mean, this market just keeps going to the upside. It's not pulling back. it just, I think it's been L1s the whole way up. I don't think it's even pulled back from the bottom. Yeah, the bottom was even L1s. So even from the low, which is very atypical, the reversal, the biggest pullback that we've had so far on this trend to the upside in crude oil is an L1. That's it. So, I mean, obviously, the next time it gets back to L1, buyers are probably going to be there. Let's be fair. But I tell you what, if it gets down to that L2, talk about a double down, deep value pullback type area. Yeah, then we're talking some areas of interest. But that's so far away still. The market just has such a hard time reversing with this kind of momentum. I mean, the L2 is down at 68.55 right now. Not to say that it can't get down to that area, but geez, that's a reach. That's a big reach. L1, at least, is at 70.25. That's a little bit more in favor. That would be about a dynamic -1 DP move, so that would fit. On the euro, mostly sideways, but the important thing here that we were talking about before, that wedge bottom, they still have not reached out and tested that. It's a big sign of weakness. Along with that sign of weakness, when the market came back down to these lows, it attempted to break out of the bottom, had several higher low failures, and then rolled all the way back up. When it came back down, where did it bounce? Right there. It's a very strong implication that buyers are still trying to get this thing going, and they're not shying up on the bull movement here. They're trying to buy that dip. They're trying to get that thing going. Looking good so far. We'll see if they can keep it. Over on crypto, Bitcoin, I mean, this thing is still just super constricted. We've got a potential wedge going on here. It seems like it's the same wedge that's been going on. There's just nothing happening right now on Bitcoin. We need this to kind of break out of this funk and get going. Like we were talking about before, the overall major swing high, actually it's so far back it's off the screen. The major swing high is still back here in the 42, 43,000s before it confirms that this is a trend reversal. So with that being said, the bulls are still in charge, but if they lose grip, I have to be quicker to rotate to the sell side. I don't have a choice. That's where we're at right now. Now, from a sell side, I don't really like the sell side on Bitcoin. I'd rather just be an accumulation hodler. So hodl away and wait for the pullback. But if that does start shifting lower, that tells us that, well, I don't want to be a buyer for a while. I've got to give it some room. Same goes for Ethereum. Ethereum is trying to hold that rotation point. And if we look back at the previous confirmed swing highs, this is where things get a little bit different. Ethereum has broken it. They have the proof that Bitcoin does not. So when we were talking about these confirmed swings that need to happen for trends to actually and legitimately reverse, Ethereum has the break. Now, not that that break was spectacular by any means. That's not the strongest of breaks by any means, but it still broke. And that proof, even if it goes all the way down to a new low, that proof up here means that this low is very likely going to be heavily accumulated. That adds a lot of confidence for buyers. Buyers know that they can buy here, maybe reduce their size a little bit, buy 20% position size or something like that, then buy the rest on a deeper pullback if it pulls back. And if it doesn't, well, hey, still got something. All right, a lot of buyers, when you see that kind of formation with that proven trend reversal, that adds a lot of confidence, even if it goes all the way down to a new low. It'd be a lot nicer if it went flying through that swing high, but, you know, hey, we'll take what we can get. Now, zooming out a little bit further on the major swings, there again, we've got a little bit more work to do all the way up towards those 3,000s. We're not there yet. 50-50 balance. We'll see. I still like Ethereum more than Bitcoin, but, you know, hey, whatever. Looking at the daily starting off there on the NASDAQ and looking at the overall movement. Wow. So, obviously, the bears were trapped, and, well, those bears were unremorsefully ripped in half. And now we are projecting all the way back up. You remember those targets we were looking at last week or the week before? Or how long ago was it now? Looking for those upside objectives in the near term. Well, we're actually starting to get pretty close to those areas. You know, it kind of felt a little bit absurd that we were looking at those 14,400s, 14,500s. Remember that zone from last week? It's already made it all the way up to 14,155. We've already made new all-time highs. This is incredibly bullish, especially when you have this kind of trapping formation. So with the traps and everything stacked in the middle and all these pullbacks and these desperation attempts of trying to get out, I mean, it's probably not going to be, it's not going to be long. You start breaking above it, like we were saying. It doesn't take long for these moves to trigger once they finally have the catalyst. I'm not expecting that to be a month until we get up there. I'm expecting it to be like 2 weeks. Remember we were talking about that? Sheesh. Here we are, right? Bull bar after bull bar after bull bar after bull bar. Hey, there's a doji, and then a bull engulfing candle. There's a lot of strength going on here. Now, obviously, now that we've hit those all-time highs, we are hitting and tagging some major objectives. So with those major objectives being accomplished, a lot of traders will start backing off. They'll start taking some intermediary profits. It would not be a surprise at all to see the market stall up here for a little while. It would make sense. Profit taking. If it's profit taking, though, it shouldn't pull back too far. That's the key. And we'll see a lot of that, at least more definition of that on the 60-minute and 15. Looking at the overall volume to the upside, we had that gigantic rally higher, huge POC that was built. The market broke above it, very swiftly came back and tapped that break even and rolled all the way back up to the highs. We now have a situation where if we project this a little further forward, get all of the price action up here. We have not shifted the POC yet, and they've actually still got quite a bit of work to do. At the moment, the POC and the sellers, if there are sellers, they're still stuck short from 960, if they didn't take the exit, of course, which I'm very certain they took the exit. Just saying. But if they didn't, that's going to be the zone of interest at the 13,960s. I doubt it pulls back there before hitting the objective. If it does, it's likely a flash crash. And it's not going to stick around for very long. We'll see. So far, the market's kind of bunched up this morning. We've got some Asian to Euro session stacked higher with bullishness, but you can see the majority of the the Euro session was spent in the Asian session rally or shortly thereafter. Giant breakout rally to the upside, and the Euro session couldn't even break above that. So, I mean, how much of it is actually there? You know, how much of this is actually bullish, or is this just one giant range? I'm looking at it more like one giant range. I think it just makes a bit more sense. And you can even subdivide it a little bit. You can see there's a pretty nice little shelf there. And that subdivision kind of adds a nice little bracketed zone of support down here. So buyers will be buying down here for sure. Let's see. From a measured move perspective, that was a perfect measured move. And actually, if you look inside kind of between the lines, that was another really perfect measured move bounce right there. It did go a little bit further, but that's pretty impressive. I mean, maybe they slide once more. It puts it right in those 87, 88s. Perfect. A double deviation lower is at 87.25 as well, if you wanted to add even more to that. There's so many things that are completing there, it's absurd. Which almost leads me to believe that the first time it hits, it's going to be a trap, you know? It's just that vindictive side of NASDAQ. Either way, market's looking all right. Got the stock exchange open here right around the corner, about 11 minutes. Got some time. Crude oil on this rally higher is, man, it's really tough to ignore in these 71.60s, I gotta say. 71.61s, this whole zone. But it also has, in the short term, like the 5-minute chart, deviated very far away from the moving average cluster. You might need to pull back a little bit further. And in that case, an L4, like, might be a bit better. Hey, 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 welcome, welcome. Hopefully everyone is all rested up and ready to rock and roll for today. We've actually got some news. It's better than yesterday, I guess. As far as zones of interest on golds, again, down in these 43s, 44s. Really just a new low, but somewhere down there. The Euro's already kind of had their bounce off of that low. Kind of curious what a faster time frame, like a 1 minute chart, looks like. Like when we zoom in super, super close, yeah, you can see, I mean, it's still very obviously early to the party. I mean, the moving average cluster just crossed to the upside, and it's just breaking above a previous swing. So, this is fresh, like hot off the presses. But a potential pullback might be fairly nice. I mean, this has been diverging off the lows for quite a while from a 1 minute perspective. And with this excess continuation to the upside, the low, well, I don't think it even really pulled back. Oh, there was that little one right there. It's an L2. L3 at the low, I guess. Sheesh. The really, really tiny pullback so far, obviously the 1 minute chart, but we've got an L1, an L1, an L1. So honestly, a TUL2 right out of the textbooks, right? Right over in the Day Trading Academy, right out of the textbooks. That would be the potential setup now for the Euro. That's not right. Let's try that again. At the moment, that puts it down at 21,375. It's a 1 minute entry on a 15-minute bounce. And it's going into the open around the corner, you know, grain of salt, but it's there. $9.28's the next big time slot. Where would that be from the 15-minute perspective? That 1 minute entry point is almost just a touch too high. I'd rather try to get it slightly inside that L2 entry with the understanding that I want my target just a touch lower. There. Perfect. 21,360. So if we migrate back to the 1 minute chart, let's confirm. Yep, that's at the bottom of the L2, so it's still viable. It fits perfectly. So optimized entries and everything. Nice. See what they want to do. This volume is incredibly low, but where'd my 5-minute chart of the S&P go? Old Faithful. There you are. Oh, that's right. It's on RTH. Good old Faithful. Look at that rally up yesterday on the S&P. Absolutely absurd. A day where nothing happened. Mind you, remember yesterday we were talking about wanting to reach out and finalize that objective? They never did. They couldn't finish the job. Now, what's interesting, if we offset it, right, we can see that they did deviate inside of that up to this point. So if we deviate that distance, then it kind of clarifies why there was so much support here. They were modifying it. But then they started doing this. It just, I mean, it didn't look like they were modifying it, you know? Like, they did it in such a sloppy way. But in hindsight, you know, yeah, you can see it. That's one thing that I've really got to start getting used to in terms of the S&P just because it's been detached from the NASDAQ for so long. With this slowdown of volume and everything else, really got to kind of keep ourselves in check of wanting to get too aggressive when the market isn't actually being aggressive. This volume's super low. Yesterday was the same, at least in the morning. I probably changed a little bit, huh? From the 15-minute perspective, looking at the overall volume, they reversed off of that low so quickly. It's hard to say where that volume actually was. Yeah, I mean, right down at the bottom. So they formed the POC on that drop lower on that 15-minute bar. That's pretty disgusting. With a reversal back to the upside. Would you look at that? So, I mean, with this continuation to the upside, that's got to be the starting point at the low. Have they made a new high? No, they haven't. Oy, oy, that would be the third lower high? Oof. That's tough. That's real tough. That deep POC down in the 14,000s still. But if we include all of this price action, almost a guarantee they shipped. They didn't. Holy crap, after all of that, they still didn't shift the POC. That is nuts. So the amount of time that the market spent here compared to the amount of time that the market spent here was not enough time to shift the POC. That's bonkers. If it is going to pop back up again, chances are it's going to be a POC shift reversal off the top. Or at least an attempt from the sellers. It's an all-time highs reversal. Congestion with 3 lower highs and no POC yet? If this keeps falling, though, and the market doesn't give us that POC shift reversal on the highs, you can see where it's going to happen right there. That little line just kind of squeaking through. Let's see. How much work do they have to do? Did they set themselves up nicely? Man, that line's hard to see, huh? Where's that stop? Right there. Okay. Have they set themselves up for success? Ooh, they're still going to have some work to do. It's not going to be easy to overtake it. Okay. We'll see. They're going to have to dumpster some orders up there if they're going to shift the POC. $9.29 with the open right around the corner here. $9.28 really didn't do much. Looking for a bit more continuation to the downside towards those 85s. We'll see if they're able to finish it off or not. 1 minute until the open. All right. 20 seconds. Right around the corner here. See if we can get a quick little juke down to those lows. Those 85s would be a nice little hot spot for buyers. S&P at the open, you can see the current price line, 42.48 quarter. We're going to be opening up with almost no gap now. They've pulled back almost all the way. Look at that. Inside gap on the S&P. An inside gap up. Man, how did they manage that? Just, jeez. Talk about really hitting the hammer down. Holy cow. All right. Well, they got an inside gap up on the S&P. So with an inside gap up, I mean, realistically, a lot of traders going into yesterday's rally would have been buying into yesterday, hoping for a pop going into today. right? I mean, let's be fair. This is nothing but pure emotional chasing and hope. That's all that is. So when they're buying into that pullback right here, what they're hoping for is to buy on the close of a bear bar and sell when it opens up the next day. In this case, it opened up not very far away. So seeing it sell immediately with an inside gap, that's not a surprise. There's a little bit of kind of upset. Like, really? That's it? Like, after all that, they opened with an inside gap up? For real? And now everybody's jumping ship. They were hoping for more, right? That's the greed, but they're keeping their greed in check. Good for them, you know? But it didn't work. I mean, it kind of did. We're seeing a push down off of disappointment more than anything else, which makes me not want to be the first buyer to the party, I'll tell you that much. When there's disappointment in the air, I'm not the first one to hold that trampoline open. A lot of times that's when they're trying to chuck the piano out and trying to save the heirlooms. Nope. I'll wait for you. Yep. Still blowing off the lows. I don't care about your piano. Bottom of bar 78 as far as the S&P is concerned. Maybe even the opens and closes. Do notice that they left behind a gap between 77 and 78 close and open. I don't want your stinking paintings either. Still diving. Watch the volume on this drop. It's not going to have a lot of time to put volume in these locations. So big POCs while the market's falling or something along those lines will be clues. We have a massive overextension to the downside. Sellers will very... Whoa, okay, well... now remember, it's not going to be very hard to shift a POC because, well, the market's not spending a lot of time in these areas. So seeing a POC shift down here, that's kind of irrelevant in a way. As an example, if we were to include all of the action from the top, it's not even close. I mean, look at the volume difference. It's way back here. Starting to see some shelf resistance forming from the scalper's perspective off 74.75. Nice little pop. Oh man, I didn't even get a chance to get filled. Ooh, nice jump back up. Beautiful secondary fill. Thanks, NASDAQ. I'll take that scalp. Nice. Quick little juke back down for the scalpers. Very nice. Now, it might continue more. That's fine. I to be honest, I wasn't expecting to get that second contract, so I kind of exited a little bit quicker, kind of icing on the cake. Like, oh, okay, well, thank you. Still running into some problems down here. Obviously, I'm very light on the sell side, primarily because we know that we've already achieved an objective and it's heavily overextending to the downside. We're just waiting for them to find, you know, when the person's actually going to jump out the window instead of the piano and all the other crap. Doesn't feel like they've hit the emergency chutes yet. There's some definitive volume stacking up, though. Looking back at some of the previous pullbacks, this is why when you hear me talking about open windows, this is why I don't like them. This is why I don't like accumulating into them, because they can cause some serious problems. An open window being this giant distance that was left behind with no pullbacks and no structure. And you can kind of see the windows right inside here. When the market starts piercing into this area, there's nothing to support it. There's no structure. There's nothing. So if you're a buyer here, that's last ditch, right? Like, if it starts cracking below that, game over. Usually slides to the bottom side. They're starting to try to put in a bottom. Sellers, as expected, were quick to exit, although it did go further than I thought they would. They made it down to a new low. And you can see what happened when they made that new low. Everyone's like, wow, really? Okay, exit. Very strong bounce off of the lows, which further dictates the concept that sellers do not necessarily want this to go down further yet. They're looking for better prices. They're exiting very quickly. There's more exiting going on down at the lows than there is adding. The stop runs over, obviously. We've already gone through that. Now they're looking for kind of a redistribution in terms of what's going on. Is this our morning V bottom? We'll see. Nice strong bear bar to the downside. One of two scenarios, very fast or total reversal. I like sitting on the sidelines a little bit for the second bear bar because usually if they do, that third one will bounce back up and give sellers an opportunity to get in. Sometimes, not every time. There's that pop for sellers to try to shove the market back down again. Nice little re-entry point. Heavy selling pressure. Holy cow. All right, no follow through on the selling pressure, though. They might try to get a secondary pop here. Wow, no follow through on the top again. There it is. Nice little sink. First one was technically a loss based on first in, first out. Based on average, it was a win. But technically speaking, that first one is going to register as a loss. More continuation down. Beautiful bear bar. Maybe another pop back up into the 75s. But the problem is here, we're challenging that big bull bar. And in order to challenge that big bull bar and really kind of take it away from them, they're going to have to shut it down, and they haven't. Looking on the first candle on the S&P, starting to look, although there is going to be a big gap in time, a bit of a V-top. This big bear bar, again, I don't think comes as a surprise. A lot of traders are going to be looking at this as a buying in, hoping. They're gambling, right? Taking the lotto ticket. Didn't work. Worked very little. They start exiting. We see the disappointment. It flushes lower. They're looking for a zone of support, like we were talking about, between 77, 78. That's a support zone right now that they're trying to maintain. Still very early, and there's still a heck of a lot of down pressure. And remember, when there's disappointment in the air, it's tough to want to hold the trampoline up. Nice bear bar back down again. On that 500 tick, sellers are really trying here. But, man, they're not getting it done. Looking at this from the perspective of the pullback, the POC is currently at 76. And the market's still closing above it. Remember, we're in a big zone of support down here. I typically like getting something other than a V bottom, but it's the NASDAQ. Two-legged correction back. This is where sellers, if they're going to try to take back over, are going to try to take back over. Actually, I missed it. I thought they got it there. Whoops. Euro's still in process of pulling back a little bit here. 21,360. It has been a little bit of time, so let me re-evaluate on the 1 minute. No change. They did bounce off the top of L2. Of course. Let's see if they want to go a little bit further down, I guess. Upside objectives are derived off of the 15-minute perspective. This is just using 1 minute to find entry. As far as upside objectives go, I like the target where it is there at 21,660. Although, again, you can see big wide open spaces. They left the door wide open. Oops. Shrink that back down. There we go. All right, 9:40. Still got about 20 minutes to go. Looking at the first 5 minute, although realistically we haven't even gotten outside of the first 5 minute yet. It makes it a little bit more challenging to really consider it. so far, but it is there. 72.50. 72.50 is the 5-minute POC. Nice dive to the downside, retesting 76 from the top side. Now shifting POC up, 81.75. Do you see that quick little shift there? Ooh. Okay. Shifting 81.75. There's still 170 ticks left on this candle. Remember, we've got to be extra cautious because of the time of year. These candles are closing slow. It did close above 81.75. The sellers do not have control yet. There has been no separation below the POC. Making another new high. 3 press wedge top. Sellers who are looking to try to get optimized entry pricing will start selling up here with very small stops. Big reward. Bar 2 after bar 1 on the S&P. I mean, it's already a disappointment, right? Like, you can't really be disappointed after a disappointment. When you've got this giant slide to the downside, nobody's necessarily expecting this to go tanking lower. This is a slide down off of a disappointment from the previous buyers yesterday. Disappointment usually is one big dump because everybody jumps out at the same time and then the market finds some balance and pauses. So seeing it pause here on bar 2 and seeing it demonstrating potential support around that 77-78 transition, it looks pretty good. If the bull bar can close back up on bar 3, closing back up in relatively strong, then we may see signs that bulls are going to try to take this higher. The one caveat to that is the disappointment of bar 1 and the fact that that may end up being the top of the day, meaning that the top of bar 2 ends up being a big zone of sell-side resistance for sellers to try a scalp off of. It's tough because of this bull trend in its face. I don't know that I would want to be the first one to the party there, but it's there. Now, I like this more from the bulls' perspective, especially if they can close out a strong bull bar 3. That's more so buyers just looking to re-jump in after a pullback that they tried getting into last night. If sellers were trying to take it lower and they jumped the gun a little bit and entered in a bit early, it's likely that they are stuck. We've doubled up into their stop locations around 14,100. If the market is going to rotate back down again, it usually pierces through these a little bit, 100s to 105s maybe, but this is where sellers, if they're going to try to come back in, they need to start shifting POC. They need to show up to the party. Every time they've had a chance, it's failed. Stayed out of them, which is good, but that ever-looming fear of, is this a V-bottom? It's still kind of hanging out a little bit there, you know? Euro lifting up a little bit. So far, I've missed that pullback. Gold has done nothing. Actually, gold has done literally nothing. Crude oil has also done nothing's happened. Zero. Take a nap. That's the only thing that's happened is a little bit of a slide here on the indexes and nothing else. Zoom in a little bit closer here and see if you can find some scalpers momentum. I think sellers are potentially getting slapped a little bit here. This is going against them a bit further than I think they were necessarily anticipating it would. We already know that the sellers who are in are sellers who may have kind of jumped the gun a little bit, waiting for or jumping in before the pure transition of power. We saw them attempting it inside here, right there. Tried, never triggered, and then closed right back above it again. And right back on up it goes. Now, if this thing starts piercing the 40... Okay, well, yep, there. Never mind. Now that it's pierced the 41.14s, we now have a pure, full-blown trend reversal. It has confirmed the swing reversal now. A lot more than just this little itty-bitty one down here. Beautiful bar 3 on the S&P that will definitely get buyers involved above bar 3 looking for a continuation, especially noting where it closed. All right, remember what we were talking about? 77 to 78 transition? Guess what it closed above? Ta-da! Beautiful bull bar. It's only a first long, but realistically, buying in the face of disappointment now that we've seen a bottom is okay. Disappointment doesn't have follow-through. Disappointment has a hurt, jerk, knee reaction move, and then it's done. Washout, usually, is another run for that one. That's what bulls are trying to get. We're halfway up the bar. That's where first targets start coming in. Jumbotron reversal to the upside. Sellers underwater having a little bit of difficulty. So bulls are still definitively long and still looking to stay long. Problem, we have hit settlement. On the NASDAQ at least. First zone of interest would be a quick little flush. I would love to see if they can get a quick little dive down to 14,100s again. That'd be nutty. So far, this is forming, kind of shaping up to be a small little pennant formation. So I'm still looking at this as a potential for a scalp long if this starts closing back up again. Otherwise, give a nice little flush down here. All right, I'm going to use bid instead and see if we can get a slide down because they might try to punch the low here and see if I can get a better price. Or it's just going to pop right back up again. That's fine too. Very strong bull bar. Very strong bull bar. Looking for a continuation long above settlement, but keeping sizing small because if they do want to challenge this area, this is a perfect spot to trap longs at the top. So I'm going to keep the risk small up here. I like the upside potential. I like the chances that they have here of getting a pierce above the 16s and a ride back up through potentially in the 20s. Looks great. But there's a lot of open space below me. Doop, doop, doo, doo. Looks like they tried to get a bear engulfing candle, but it totally failed. That's a garbage bear bar, so, I mean, they're more than welcome to trigger it in. That's not really that bad of a bear bar at all. I think buyers still have full control over this. Unless they go, well, they looks like they're trying to do bear engulfing round 2. They missed it again. Lots of wicks starting to form up on the highs here. Ooh. All right, all right. Little bit jerky, little jerky. There we go. Pop the 16s. Nope, couldn't do it yet. Man, they really want that bear engulfing candle, don't they? It's like the that's like, all right, let's do it again. Still couldn't do it. It's like the 4th attempt. Bar 4 on the S&P. Not the greatest bar, especially if buyers bought bar 3. That's going to put them on the sidelines a little bit and make them a bit nervous for a potential deeper pullback. Noting that they're supporting bar 77 to 78 transition, the idea here is that they're going to want to stay above that, and closing underneath it will likely start treating that 77 to 78 transition as a zone of resistance. Talking about bars 77 and 78 on the S&P. There. Golly. Thank you, NASDAQ. Now, here's the problem, right? Who's going to buy it after waiting that long? See the problem happening? It's happening directly right in front of your eyes right now. After sitting through, put yourself in the shoes of everybody else. After sitting through all that BS, who's going to buy it after it pops above that top? I'll tell you who. Nobody. They're gone. Luckily, enough people to buy some targets out, but that's about it. Context is everything. Do not expect that to stick around. Deeper pullback, maybe. I don't know, but that was terrible. You got the POC right up at the top, 41.13. Noticing that we do have a lot of congestion here. This is the seller's attempt with a POC shift to break it down. This is their chance right now. This is where if they're going to hit the gas pedal, they need to hit the gas pedal. It's got to hold here. Now, it doesn't mean that it can't go up to 15. But the fact that they're shifting the POC, it's at settlement, this is the spot. If they are going to take this down for another leg lower, they need to do it now. And if it starts failing up through another new high, getting through the 41.20s and 25s, that's a huge problem. That's where things start completely falling apart for shorts. And then we start deviating the entire move. Uh-oh, there it goes. Starting to deviate the entire move with projections that are putting targets at 14,162. Who wants to be short with a 50-point stop ahead of them? Going into all-time highs, nonetheless. I'll tell you who. Right back up it goes. We'll see what they want to do, but I mean, you can see the fist fight happening here. Crazy how they're playing it out now. Euro. Ugh, Euro. Euro, why? Why? No! Off the top. All right, well, unfortunately, the Euro, there's nothing I can do about that. I missed the Euro. I tried optimizing my entry as much as I could to ensure that I was in the most favorable location, and it skipped me. So, 21,360 is no more. Sad days. Let's see if they want to give something else. Crude. Yeah, crude's tickling the high, but there's not really much going on there. Gold. Speaking of nothing. S&P pulling back a little bit further. NASDAQ. They tagged the bottom of the wedge. Oh, we're back to POC. Oh, well, kind of. Not quite. Looking on the S&P now, look at how this transitioned. Look at the movement that's been going on. We know bar 1 was nothing but disappointment. That's all it was. Pure disappointment. Nobody's expecting follow-through. They didn't. Buyers picked that up off of this bar 77 to 78 transition. No surprise. Bar 4, we wanted to see where does it close. Closes on top of 77 to 78 transition. Okay. Bar 5 closes underneath it. Might be a problem. Maybe. Maybe. Not necessarily yet, because there's still 5 minutes left. But if this starts triggering underneath this bear bar and staying down here, especially closing again, that's going to add more problems, because what do we have? Wide open spaces. There's a big problem here. Buyers aren't going to want to accumulate into that, which means it's going to sink all the way down. There's nothing to hold it if it starts losing ground. That disappointment, although it wasn't necessarily followed through with anything initially, might be starting to get ramped up with a bit more than just disappointment now. 4113, that's a possible transition of power. Sellers will be looking to the downside more on the longer term, medium to longer term option side of things. I don't like this from a futures perspective because the trend is still technically bullish and we're trying to see them transition to the upside. But on a put side, going into the options for the end of the day type stuff, definitively sellers will be shifting here off of that 4113. Right there. But remember, longer term. It's not like, oh, in, out. I mean, it would have worked if you took it that way as a futures trade, I guess. But that's not the concept there. This is more the concept, getting back down to like maybe 87s. Would love to see them get back down to 72. Nice thing about options, they've got time. Very strong continuation back to the downside. Now, this might be nothing more than earlier traders for break-evens, right? But given the slide down and the transition of power, I like this for a potential short, just a short-term short, though. Looking for just a bit more down to the lows to finish off the job to 95. Right there. Nice. It's forcing sellers to sell super low, so I'm not going to be hanging on for a long period of time by any means. Not interested. What I would like to look for, though, is a little bit more of a pullback if we can get it, or I guess in this case it'd be a retrace. The transition has happened. In the short term, scalpers are looking for downside areas where they can jump back in and try to pressure back down. We just haven't had a correction yet. Back up into like the 102s maybe? Got a little ways to go yet. 102s, 103s. It's holding the moving average cluster, but again, if we zoom out, we can see that this is still early to the party, and a lot of times these transitions don't take place without nice reversal points. Looking backward, we have an L4, then an L2, rotation back up, and they're attempting to hold an L3 right now. So maybe one more new leg down might not actually hurt. Transition to power up at the top, start cracking through. That would add a lot of context. This weakness on the low isn't helping. All right, 10 o'clock right around the corner here. Let's get those final questions in on this side, and then we'll transition over to the members side on the extended session, and then we'll wrap up the day. Looking at the S&P on bar 5, that close into bar 6, we're also going to see where do they close. They have 25 seconds left. Ooh, man. That might be just enough time, huh? Let's see where they want to go with these last 10 seconds here. I mean, it's going to be a weak bear bar either way, but triggering above that bear bar, we may find some buyers. That would be a second long above bar 6. Buyers attempting to get that bullish continuation going after a nice little pullback to that 77-78 transition point. All right, 10 o'clock. Not seeing any other questions coming in so far, so that's going to do it for the morning side of things. I hope you all had a fantastic morning so far, and you've been enjoying things as they've been setting up a little bit more rapidly today than yesterday. Snooze fest yesterday. For the VIPs, you just hang out in the Zoom session, listen to me transition while I talk to myself for a minute. On the free side of YouTube, I hope, like I said, you had a fantastic day, and I will see you all tomorrow. For members on the extended session, you can find the link for that in the communities page. So we'll see you all there. For the rest of you, we will see you all tomorrow morning. All right, enjoy, rest up, and we'll talk to you all then. Thanks.